advantage of first-generation entrepreneurs.
Okay. With that, we're going to wind up on Trading Hour. Thanks very much for watching. For now, we leave you with some important market opinion coming in from Ed Yardeni. Thanks for watching.
I think it's a relief rally. I'm not particularly bearish. I think the market's going to go sideways with a lot of volatility. We're still going to have the Federal Reserve raising the Fed funds rate at their November meeting. That'll be early November. So in about a month, we're probably going to get another 75 basis point increase in the Fed funds rate. But a lot can happen in 1 month, as we just saw in September. And it does feel as though September was the worst month, it was a bad month historically. And October sometimes does better, especially if September created some buying opportunities. So I think the worst is over in terms of the downside, but I don't see a tremendous amount of upside anytime soon. I think we need to get to a point where the Fed clearly is done tightening. When the Fed changes its opinion, that's a pivot, but it sometimes can be based on data that they didn't expect to go the way it went. What we saw is in July, the Fed was still talking about possibly pausing in September or November. And in August, they were suddenly talking about just raising interest rates as far as necessary to bring inflation down. So that was a pretty hawkish pivot. And I think the next pivot that the markets are expecting is a more dovish pivot, or let's call it a less hawkish pivot based on an economy that's slowing down with inflation continuing to moderate. The way I see it is the U.S., among developed countries, the U.S. is widely viewed as a safe haven, which is why the dollar has been so strong and why money has actually come into the United States. So I think on a relative basis, the U.S. stock market and bond market will probably do better than some of the stock and bond markets in the other developed countries. Among emerging economies, India stands out as doing particularly well because China's got all sorts of problems, and the strong dollar tends to be bad news for emerging markets that have borrowed a lot in dollars, which doesn't seem to be the case for India. So India stands out among emerging economies, and the U.S. stands out among developed economies. At least on a relative basis, India looks very good. So not only does India look good in absolute terms, but compared to some of the problems that other emerging markets are having, a lot of emerging economies are very dependent on selling commodities around the world. And because of the strong dollar and the slowing global economy, commodity prices have been coming down. We also know that companies like Apple are moving towards India and away from China. And again, that benefits investors who are looking at putting their money in India rather than China. So again, in absolute terms and also in relative terms, India looks good among emerging economies.